Good afternoon. I'd like to welcome you to the Korea Economic Institute. My name is Troy Sangaron, and I'm the Senior Director for Congressional Affairs and Trade here at KAI. I think we're going to have a very interesting discussion today. As we're all aware, Korea is one of the great economic success stories of the second half of the 21st century. Not only was it one of the great development success stories, but it was the first country to move from being a recipient country to a member of the OECD Development Assistance Council. And after the global financial crisis in 2008, is one of the countries to recover quickest and the strongest from the financial crisis. But at the same time, in recent years, South Korea's economy, the growth has started to slow down. And to address the challenges that Korea's economy faces, President Park Geun-hye has proposed a shift from Korea's traditional economic growth model to one focused on a creative economy to enhance Korea's economic growth potential. We are fortunate today to have two experts on the Korean economy here to discuss the state of the Korean economy and the challenges that it faces. Randall Jones is currently the head of the Japan-Korea desk of the OECD's Economics Department. During his time at the OECD, Dr. Jones has written extensively on the economies of both Korea and Japan. Some of his recent publications on South Korea include the country's approach to mitigating climate change, reforming its healthcare system, and addressing the prolonged problems it has suffered as a result of the global financial crisis. And he'll be speaking specifically on the OECD's recent survey of Korea's economy. Prior to joining the OECD, Dr. Jones worked at the U.S. Department of State, the Japan Economic Institute, and for the Council of Economic Advisors. We are also fortunate to have Isabel Mateos y Lago, who is the Assistant Director for the Asia and Pacific Department and the Korea Mission Chief at the International Monetary Fund. She recently worked on an IMF staff report addressing South Korea's economic prospects and challenges for 2013 through 2014, and contributes to a number of other IMF reports and working papers involving South Korea's economy and more broadly international economics. She has been with the IMF since 1999 and has held a number of different positions at the executive board level. Prior to joining the IMF, she was with the French Ministry of Economy and Finance, where she worked on a broad range of economic policy issues. Thank you. Randall?
Well, I'm very happy to be here today, and I want to thank KEI for giving me this chance to talk about the survey of Korea, which was published in June, and thankful for Isabel for coming to give comments as well. So if I push here, I go forward. Voila. And so I think you all have a copy of the overview document, which is also 한국말로 출판했습니다. And so you can see the first chapter of what we did in the survey. So it has the assessment and recommendations for the survey. Perhaps I should mention what an OECD survey, how we do this to start with. There's 34 countries in OECD, and they're supposed to be reviewed regularly, which in practice means about every 2 years. So I do Korea 1 year and Japan the other year. And it starts with a visit to Seoul, and I visit the ministries, now in Sejong, unfortunately. And then I go to all the ministry, the research associates like KDI and KIEP. And then I visit the social partners, the employee federations, like labor unions. And then I visit academic experts as well. Then I go back to Paris and I write a draft. And we send this first part, this assessment recommendations, back to the government. And I go back to Seoul and talk about it with the various ministers. And then we send the whole document to all 34 countries and the IMF and the WTO. And then we have a meeting in Paris for Korea. It was March 17th. So the Korean government sent about 25 officials, and they came to talk about the survey. And we had all 34 countries around the table. And for 1 day, we talked about it. IMF was there as well, and I think WTO. And we talked about it. And the following day was the most important day, because I go in a room with these 25 officials, and we go line by line through the survey. And we try to narrow our differences. And the end product has to go back to the 34 countries to be approved. So if I give in and put whatever they want, then the other countries won't be happy. Japan or the US or EU might object. But then if I don't do enough, the Korean government won't be happy. So we have to find the fine line where everyone can accept the language. And once it goes back to the committee, it's accepted for publication. And then we present it to the president. And so it's a long process. At the end of the day, the survey, in a sense, has been vetted or approved by the government. So it has a certain validity. But we have no power to force a country to do what we said. So 2 years later, in the summer of 2016, we'll go back and say, well, you did this, that you didn't do this, and we think you should do this. So we can go back and we call it peer pressure. And so countries will say, you should really make these changes if you want to be a better economy, a better country. And so it's a very, there's no money involved. We don't have any financial sanctions if a country doesn't do what we want, but we give them recommendations what they should do. And in general, I've done 13 surveys of Korea starting in 1992 before they joined. Korea is one of the countries that tends to take us very seriously. And over time, they tend to introduce what we say. Whereas in the U.S., U.S. survey doesn't have a big impact on Congress or the president. So we don't work on the U.S. be very disappointing because you don't see your impact on the country. So Korea's been a very fun country to work on. So in the survey, we had three major topics. First, the short-term economic outlook, and then the idea of a creative economy, which is the government's major theme, and then the question of social cohesion and well-being, kind of the inequality issue. So first of all, this is our projection. It might be too small to read, but this came out in April. I made this 2 days after the tragic ferry, the Sewol, sank. And I haven't revised it since. Every 6 months we get to revise our forecast, so it quickly gets out of date. But we saw Korea sort of a slowdown in 2012, 2013, then coming back towards potential. And now the latest feelings are a bit pessimistic. I think Bank of Japan lowered their projection to 3.8. It's partly, from my view, the negative sentiment from the tragedy. In the past, there were many tragedies that didn't seem to affect Korea more than a week or two. The Cheonan incident in 2010. But this seems to have really caused some doubts in Korea. And the second thing is we base our forecast on an interactive process where all 34 countries make their projection. So I project for Japan their import growth, in the US and China, all the various regions. And based on the projections, I expect Korean exports to grow 5.9% this year and 8.5% next year. But since we did this in April, based on data for January, the world economy doesn't seem quite as buoyant as we might have hoped. So when I go back to this in October, I wouldn't be surprised if it got revised down a bit. The other problem in Korea is household debt. And that's a problem because many households are debt constrained. The debt ratio, the stock of debt, is 164% of household income. And so you can see that private consumptions lag behind output growth, and we project that to continue. A positive feature of Korea is government debt. The balance, the budget balance is generally in surplus, even on a general government basis. And government gross debt is about 38% of GDP. The OECD average is 100%. So Korea stands out as a country that has a very strong fiscal position. But our forecast is very contingent on world economy. What will the world economy do? Because exports are about 51% of Korea's GDP. And so this exports is a very hard number to predict because world trade is very variable. So the big risk to the forecast is exports. The exchange rate as well fluctuates greatly. In 2008, we had the sharp decline. And then since 2012, the lighter line is the yen. And the Korean won has appreciated 38% against the yen since 2012. The Korean government was very upset about that for a while. So far, Korean exports has held up, and Japanese exports are surprisingly weak. So far, we haven't seen a big impact because of the exchange rate. But Korea seems somewhat protected against another foreign exchange crisis as we had in 1997 and again in 2008. We have foreign exchange reserves above 350 billion, and short-term foreign debt has fallen to about 100 billion, reflecting macroprudential controls that are being discussed at OECD. And I should also mention that having foreign exchange reserves is also very costly and not necessarily the best approach to trying to protect yourself against another crisis. But let me turn now to the longer-term issues, starting with the new creative economy. And when the government asked me to do a chapter, I decided to divide it. Well, first of all, there's the long-term view of Korea. As you know, as Tony mentioned, Korea has gone from being a very relatively poor country. In 1970, their per capita income was 12% of the U.S., and now it's up to 62%. But then we've seen it kind of plateau at about 62%. So the question is, how does Korea make the second step and go from 60% up to 100% of the US? For Japan, we got up to about 85% at the peak of the bubble in 1990, and now Japan has fallen back relative to the US. So the question is how to keep the convergence process going. And growth is very important in Korea. In Europe, many people are saying, why do we want growth? And we focus more on gross national happiness. We focus on quality of life. The OECD is trying to take a lead in that, and it's very important. Korea is a country where I think growth is still important, partly because of aging. And Korea is projected to go from being one of the youngest economies. This is the share of over 65 as a share of the working age. So Korea is the fourth youngest population in 2012. And we project, based on the birth rate of 1.3, that by 2050, Korea would be the second or third oldest after Japan and Spain. So this rapid demographic transition will be difficult because it puts very intense pressure on public finances. And a second reason for having growth is the question of North Korea. And I've only been there once to visit Kaesong, but the gap between the two Koreas is enormous. You see in the second line, if you compare the overall economy, gross national income, the South Korean economy is now 38 times larger than North Korea. When I lived in Korea in the 70s, we thought about the two economies being roughly comparable. Even in the 60s, people thought North Korea was larger economically than South Korea. On a per capita basis, the gap is 19 to 1. And so at some point, when we have a rapprochement between South and North, that could be very expensive for South Korea, depending on how it's done. And of course, in the case of Germany, it was very difficult and very expensive. So these are two reasons why we think Korea is a country that should try to maintain growth. It's very important not to start going to stagnation. This is our famous OECD chart. I don't know how visible it is, but we divide income differences between labor inputs and productivity. So in this left-hand column, we have per capita income, and we compare each country to the top 17 OECD, the upper half of OECD. So Korea's per capita income, adjusted using purchasing power parity exchange rates, which adjusts for price differences, Korea is about 30% below the top half of OECD. Now we can divide that between labor inputs as a huge labor input because they work long hours. In Korea, the average working time per year is about 2,200 hours per year. And in the OECD, it's about 1,700 hours. And in Europe, in France, it's about 1,500 hours. So you can see that Korea stands out because they work so hard, so many hours of work. And that the hours work doesn't really count unpaid overtime when everyone stays in the office till midnight because their boss is there. So Korea has this huge labor input, but that's going to start falling because the population, 15 to 64, will start declining from about 2016. And the working time, as people get more income, they want more leisure, so working time will go down. So we expect this big contribution from labor input to start falling in the near future. Productivity, on the other hand, is relatively weak. So productivity per each hour of work is about half the most advanced countries. So Korea has a very big scope to raise productivity. On the first issue of employment, there is a big scope for increasing employment of women. There was a roadmap published in June of 2013 where President Park Geun-hye set a target of raising employment to 70% of the working age population. And the key is women because the employment rate for women is relatively low, and the target is to raise it to 61.9% by 2017. And that's a very ambitious goal to achieve that big increase in a few years. And the policies to get more women working, it goes back to childcare, like in many countries, trying to have high quality, affordable childcare. The other problem is this work-life balance. When people work 2,200 hours a year and they work till midnight, it's very hard for a family to have two incomes because if you have children, there's no one at home in the evenings. And the other problem is the dualism between non-regular and regular. So a young woman coming out of university can start the regular employment track, but if she withdraws from labor force to care for children or even parents, then when she comes back, she tends to be put on the non-regular track, which means you're fixed term or part-time. Your wages are about half as much per hour, and it's not very attractive. There's less benefits. So if they want women to work, they're going to have to break down the system of dualism and make it more attractive. And in most OECD countries, women with a university degree tend to be much more engaged in the labor force than those with only high school. But Korea and Japan are two countries that stand out because in Korea, women with a university degree tend to work less than those with a high school degree, because a woman with a university degree tends to be married to a man with a university degree with a higher income. So the money isn't as important. But in most OECD countries, it's the reverse, where educated women are more likely to work. So this is a very a cultural thing to some extent that has to be revised. In the 70% roadmap, there's other targets as well. For the youth, only 40% are employed. And that's exceptionally low. In many countries, it's well over 50. That reflects partly the fact that most youth are still in education until 24, 25 after military for the men. And also the fact that there's a big mismatch between university educated youth and SMEs, the small companies, and the university educated youth don't want to work for SMEs. So a large share of the youth just stay at home, waiting for a good job to come along. And I'll talk about that later when I talk about SMEs. And the other problem is the older group, 55 to 64. The average age of mandatory retirement set by companies in Korea is 57. And Korea has a life expectancy of 80. So on average, if you're 57, you get pushed out the door because you're too expensive based on seniority-based wages. And I have friends who end up leaving late 40s, early 50s, get pushed out because of the wage system. And so we need a more flexible wage system that allows more of the people, more of the older workers, to stay at the firms until they're 65. And that would help. We need flexible wages that can actually go down with productivity and not necessarily keep going up with seniority. So when the government asked for this creative economy, I decided to address 4 topics. First is improving the innovation system, which is basically the R&D and higher education. The second is the framework conditions. If you want to have an innovative economy, you have to shift resources, capital and labor, from declining sectors to the innovative growing sectors. So that requires deregulation and low barriers to foreign investment as well. The third topic I picked was venture business and startups, which tend to incorporate the latest technology. And the fourth topic was the SMEs, because they employ 87% of the workforce. So if you talk about the Korean economy, you can't ignore the SMEs. So first, on the innovation system, Korea is the highest country in the OECD for investment in R&D. It's 4.4% of GDP. And so they're really focused on this. And it's partly because government support, both in terms of direct funding and also in terms of tax credits, is very high. So we get a lot of R&D in Korea. The question is, what is the return on the R&D? The other factor I should mention is a lot of the R&D is by the business sector. So this chart, the top box shows the top 5 performers. So Korea business R&D is among the top 5 in OECD. And they also rank near the top in terms of patents, TRIDEC patents families. So Korea gets a lot in terms of patents. But by other measures, R&D is not so strong. In terms of universities relative to GDP, Korea is weak at the university level. In terms of publications and top journals, they're weak. And then on the right-hand side, we have the international measures. So Korea's R&D system is a bit insular. It's not very well connected with international R&D activities. So international co-authorship and co-patenting in Korea is among the lowest 5. Another problem in Korea is that each of the 3 sectors for R&D are a bit segmented. So we have the business enterprise. They fund 73.7% of all R&D in Korea, but they do 97.3% in-house in their own labs. They only do 1.5% at universities and 1.2% at government research institutes. So you have all this money going in, but there's not much cross-fertilization between the universities. And the universities have 3/4 of the PhDs, but they only do 10% of the R&D at universities. So universities are a bit neglected. And there's not much mobility between a researcher in government or academia with the business sector. And so that's one of the factors that tends to limit how much of the benefit that Korea gets from R&D. Now, going to the second topic on this deregulation, if you look at the 3-year innovation plan, the big topic is reducing regulation. They talk about freezing the burden of regulation and reducing it. Every 5 years, we do something called the Product Market Regulation Index. And by that, the survey in 2013, Korea was the second highest in terms of product market regulation. And that means that it's hard, if you have this new technology, to introduce it into a new firm. This is another piece of research that we did at OECD, and it looks at innovative firms. So it looks at firms that increased their patents by 10% during the first decade of this century. And so the right-hand side, we take a country like Belgium, which has low product market regulation, and these innovative firms increased their labor force by 2.3%. But a country with high product market regulation, in this case we put Poland, they only increased their labor force by 0.6%. So there's less dynamic reallocation of resources in a country like Poland or in Korea with more regulation. And the second problem is there are high barriers to trade and foreign direct investment. So by our measure of this product market regulation, Korea is the highest. And again, going back to this kind of chart, a country with low barriers to FDI and trade like UK has a big increase in capital, whereas a country with high barriers has a low increase in capital in the innovative firms. So when we talk about innovation, governments tend to focus on more R&D, more spending on high tech, but what we really need is we need to have deregulation so resources can be reallocated more easily. The third topic I mentioned was venture business. And Korea, of course, had a boom in venture business back around the turn of the century, and then it collapsed. And it was a very painful collapse. And now we have it coming back. We see in the bars, that's the venture capital investment. And so now it's back to about 4.5 trillion. As a share of GDP, it's up to 0.03%. And that is good enough to be in third place after Israel and the US in terms of venture business. And the number of firms has come back somewhat, up towards 3,000. Korea classifies firms as venture business based on a number of criteria. So venture business is it's larger than many OECD countries, but this chart shows SME financing for small companies by source. And you can see that venture investment accounts for only 0.9% of financing for SMEs. So it's not playing a very large role in trying to help entrepreneurs create new firms. Bank financing is still most important at 67.8%, but that's problematic for venture business or for innovation because to get a bank loan, you normally have to have collateral, which means real estate. And if you don't have real estate, it's hard to get the bank loan. And if you start off and then you go bankrupt, you lose your collateral and you're cut off from financial markets for 5, 10 years or even longer. And so bank financing is not ideal if you want to have a vibrant venture business sector. So we need to create more equity bond, more direct financing, and also more venture business in Japan. So these are in the handout, but we talked about trying to make the M&A market bigger because that's how venture business angels get their money back. Korea has a very small M&A market. Also, the government's very much involved in putting the money in, and it crowds out the private sector. So half of the venture business money in Korea is actually government money. The third point is something that came up when I visited the Korea Venture Association, and they said, well, we have all this money, but there's no projects we want to invest in. And so we need to have entrepreneurs who can make good projects. They said their members were going to Vietnam and China, trying to find places where they can invest their money because they didn't see enough good ventures in Korea. And the fourth point would be having a second chance. I was in Japan earlier this month to start the next Japan survey, and I had lunch with a big venture capitalist named William Saito. And he said he never invests. He has 35 firms that he's trying to incubate, as they say, these venture business people. And he's trying to make these 35 companies grow and become profitable. And he never invests in a company where the entrepreneur is making his first try. Because he says 98% of the first tries go bankrupt. So he only invests in companies where the entrepreneur is on his second, third, fourth, fifth try at starting a company. But in Korea, it's very hard to have the second try. So if we want to have a vibrant venture business, we need to have people who can fail and then try again. The last topic on venture business is the SME question. In Korea, the SMEs are given a lot of support. There are a lot of public sympathy towards the SMEs. Koreans have a kind of a mixed feeling towards chaebol. I mean, if you work for Samsung, you love it, but if you don't, you have somewhat negative feelings about how the chaebol can dominate the economy. So the central government has 201 programs as of 2011 of ways to try to support SMEs. And the local governments have 1,101 programs, which means you have 1,300 programs supporting SMEs. So if you're a smart SME businessman or businesswoman, you can go around the government saying, can I have money for this program? And people make their money sometimes on government grants. So the SME sector, in a sense, is a government-dependent sector. And the other problem, well, this gives you overall view. I don't want you to memorize this chart, but it gives you an idea that there's a lot of arrows here going back and forth. And you can see that you have various institutions. The Bank of Korea is giving special facilities for banks to lend to SMEs. This part here, the credit guarantees are really the key. And about 12% of bank loans to SMEs are guaranteed by the government. In the OECD, it's about 5% on average. And so since the banks are hesitant to lend to SMEs, like everywhere, the government guarantees many of the loans. So really, we have a very complicated framework of ways to support the SMEs. But it leads to a lot of problems. First of all, the banks don't have much incentive to evaluate SMEs. They wait for the government to guarantee the loan. So why spend time evaluating the small business? It's very costly and difficult to evaluate SMEs. Second, this government support delays restructuring because companies can stay alive based on government support. So you have what people call zombie SMEs who manage to stay alive. At least the high leverage, and that makes risk for the financial sector. And finally, we have what we call the Peter Pan syndrome. I don't want to grow up. If you're an SME, you're getting all these grants, why grow? And there's a study that showed in 2002, they looked at 2 million SMEs. And by 2012, only 696 of these millions of SMEs had become regular companies of more than 300. They'd rather, most of them, the other 99.99%, are happy to stay small rather than become a real company with all in the loss of benefits of being an SME. And finally, when you look at companies that receive the government support, KDI did an interesting study showing that these recipient firms did not do any better in terms of profits or in terms of sales. So we see a lot of problems of giving too much support for SMEs. The SME sector basically has been deteriorating. In '97, the chaebol had to restructure, reduce their debt, become more efficient, but the SMEs got more and more support. So they never went through the restructuring process. And this shows the interest coverage ratio. It means, does a company earn enough to pay its interest to the bank? And you can see among the small SMEs, 17% of them in 2006 could not earn enough to even pay their loans. And that has risen to 34% by 2011. So many of these companies would be zombie companies. Year in, year out, they don't earn enough money to pay off their debt. So what can we do to help the SMEs? One thing that's always mystified me is Korea is the front runner in terms of internet. It seems that every person, even the elderly people, walk around with smartphones. Everything is based on internet and high technology. But if you look at SMEs, the straight line shows the SME situation. Only a small share use the internet to sell goods and services. So the internet is very good for games, for daily life, but it doesn't seem to be incorporated into the SMEs. And the internet is really the way that small companies can catch up, because via the new technology, you can overcome the high fixed cost that SMEs face. The other problem is this labor mismatch. So the B column, the right side, shows the university graduates. And so in 2008, 82% of high school graduates went to university or college, the two-year institutions. But if you look at 15 to 29-year-old graduates, 24% were either they're not working, they're not employed in education or training. So basically, they're living with their parents, trying to get a good job at a chaebol. And meanwhile, the SMEs, 40%, have a labor shortage. So the SMEs are trying to find workers, and they rely desperately on the foreign workers who come in under certain quotas. But meanwhile, you have this stock of talent that's sitting at home, does not want to work for an SME because the wages are low, there's not much job security, and it's very low prestige. And so we had a problem of over-education. And the former president, Lee Myung-bak, he tried to address this issue of overeducation. And they're trying to do it by making vocational education at high school level more efficient, so the kids don't have to go to university. They can go to high school and then go to a high-paying job in an SME or a manufacturing type job. So we have to really fix the education system if we want the SMEs to get sufficient labor to carry on. If we can fix the SME problem, we can address the problem in services, because 90% of SME employment is in services. If you look in the right-hand column in productivity, in Korea, the labor productivity per hour worked, per worker is only 46% of manufacturing. But in the OECD as a whole, service sector productivity is about 86% in manufacturing. So in some countries like UK, you have even higher productivity in services than in manufacturing. So in Korea, we have a very dualistic economy. We have a world-class manufacturing with a backward service sector. And if Korea wants to converge to the level in the most advanced countries, the service sector has to become really the second driver of growth to develop the economy. Let me just summarize the SME. So we want to improve the financing. So that means the public support, it should be more narrowly focused on new companies and young firms. And we should have a graduation system. Many firms get these government guarantees or loans for more than 10 years. So it's not helping the startups or the venture businesses. On the third area, we need to really scale back the generosity of support for SMEs so that they become more efficient. And then we have to improve the human resources by getting rid of the labor market mismatch problem. So let me finish by talking about the issue of inequality. And Korea has a tradition. When I was a graduate student, Korea was an example of how you can combine rapid growth with equality, because growth was driven by labor-intensive exports. So people from the countryside would move into factories, and it was it led to more equality rather than less. And since the 97 crisis, like in many OECD countries, we've seen a widening in inequality and an increase in relative poverty. This figure was given to me by the KCTU, the more radical labor union, and I guess it's from Kiasa originally. But the middle class, if you define that as below 50% of median, or more than 50 and less than 150% of median, you had 75.4% in that middle category in 1990, and that's fallen to 67% by 2010, partly because of more people in the low-income group. One reason for inequality is that we have less public social spending. Korea's at a relatively early stage in having public social spending. It was 9.6% of GDP in 2010. The OECD average is closer to 22%. And some countries, like France, where I live, is getting about 27%. Japan is about the OECD average of 22%. And the US is up to 20%. So Korea is at an early stage in terms of public social spending. To be honest, we aren't too aggressive in telling them to increase it rapidly, because in Korea, they have the framework set up: national health insurance, long-term care insurance, employment insurance, health insurance. And the government estimates, and Kiasa estimates as well, that under aging, that public social spending would reach 29% of GDP if they don't do anything more. So they already have the framework in place. It's partly the fact they're so young that they have low social spending, because in most countries, health, in Japan, for example, over 65, they spend 5 times more in healthcare than under 65. So the social spending is driven by aging, pension and healthcare, long-term care. So Korea is at an early stage, and there's not much social welfare at this point. The other problem is wage inequality. And this goes back to labor market dualism. 1/3 of the labor force of employees are non-regular, which means part-time, fixed-term, or dispatch workers, which means they work for an employment agency and they get sent temporarily to work for a firm. And so this 1/3, this problem really emerged after 1995 or 1997, after the crisis. And so in wage dispersion, this graph's confusing because we compare two things, but the circle compares a worker in the 90th percentile in wage with somebody in the 10th. So Korean has a ratio of 4.7, a relatively wide dispersion. We thought of Korea as a very equal wage country, but it's actually become very wide because of dualism. And the rectangles show the share of employees earning less than 2/3 the median wage. So about a quarter of Korean workers earn less than 2/3 the median wage. So those are essentially the non-regular workers who are earning these low wages. Now companies like to hire non-regular workers for two reasons. First of all, it's very difficult and costly to fire a regular worker. So if you have a downturn or recession, it's very hard to reduce your labor force. So if you hire non-regular workers, especially dispatched or a 6-month contract, you can let them go very easily. So it gives you labor flexibility, which in a modern economy, you need this flexibility. The other reason they like these people is because they cost much less. The average salary per hour worked for a part-time worker is only about 60% per hour of a full-time. And so you can save money by hiring non-regular. And many of them don't belong to national pension scheme nor to the employment insurance. And so that means that the company can save money on the social contributions. But this wage gap is basically discrimination. The OECD did a study of skills of adults, and we looked at permanent workers, the blue. And so for the 25-34 age group, the skills of the permanent workers and the temporary, the non-regular, are the same. So there's really no justification, there's no rationale for why these people should make such a low salary compared to the regular. Over time, the regular workers lose out because they don't get training, because a company has no incentive to train a non-regular worker knowing he's likely to leave. And the regular workers get the training. So that's bad for the non-regular workers. It's bad for Korea because there's less human capital accumulation. It creates inequality, and the non-regular workers have these perilous jobs, the insecurity of working. They could become unemployed overnight. And there's also a wall, so to speak, between regular and non-regular. So if you come out of school and you're hired as non-regular, it's very hard to make the transition from non-regular to regular. And so my friends who have children coming out of school in 2008, it wasn't a good time to come out of school because very few regular workers were being hired. And if you start off as non-regular, then you get branded as the lower skilled, the inferior quality workers. So many of them would just wait till things improve so they could get a regular job. So because of this dualism, non-regular worker, we have a lot of working poor, people who are employed but have low incomes. And at the OECD, we focus on relative poverty, which means that you have an income less than half the national median. So Korea, which we thought as being a very equal country, now has a relative poverty rate of about 15%. It's not as bad as the US or Mexico, or even Japan's is higher, but it's well above the OECD average. And this poverty rate has been going up fairly rapidly in recent years. So it's partly the dualism, and it's partly the elderly poverty question. So in this chart, we looked at poverty by age group. So in Korea, 100 represents the nationwide poverty rate, 15%. If you look at the young people, poverty rate is relatively low. But once you get to the people who are 66 to 75, their poverty rate is 3 times higher. And once you get to 75, it's even more than that. So in Korea, 49% of people over 65 are in relative poverty. In OECD countries, which spend lots of money on pensions, you can see that for 66 to 75, their poverty rate is the same as the national average, is 11% for OECD as a whole. So they manage through pension systems and other welfare systems to avoid this problem. So the problem with relative poverty, one is this tragic suicide problem. In the past 10 years, the suicide rate among elderly has gone up about 3 times. So now I think it's 72 per 100,000, and the OECD average is only about 22. So this is a very tragic and urgent social problem of people who are left behind. Traditionally, when I lived in Korea in the 70s, I didn't know any elderly people who lived by themselves. Everyone that I knew lived with their children. And now about 38% of elderly live with their children. But with the urbanization and industrialization, you have many younger people living in the Seoul metropolitan region and many older people left behind in the countryside. So the question is, how do we support these older people? Well, Korea has a multiple pillar system like many OECD countries. So I divide this into 4 pillars, because usually we say 3, but I put the social welfare as a zero pillar. We start off with basic livelihood security. And that's a basic welfare program for people who don't have money. So about 6% of the elderly get the basic livelihood protection. The problem is, why don't the other 43% get it, is because there's eligibility criteria that if you have a child or siblings or anybody who can support you who's related to you, you can't get the government support. So you have elderly people who the children don't support them, and because of that, the government will not support them. So you have this group of people who can't get neither family support nor government support. And out of the 49% who are relative poverty, it's estimated that 26% are absolute poverty. And absolute poverty means people below the minimum cost of living calculated by the government. And so Korea has a problem of trying to keep these elderly people supported. The second aspect is a basic old age pension. And that was started in 2008. But the problem is it gives a small amount of money to a large number of elderly. And so if we look at other countries that have a basic tax finance pension, the average benefit's about 27% of average earnings. But in Korea, the basic old age pension has been 100,000 won per month. So that's only about 3% of average earnings. The new law passed in June, I guess it was, doubles this to 200,000, but that means you only get 6% of average earnings. So that's not really going to solve the problem of poverty. At the same time, this basic old age pension is given to almost 70% of the elderly. So basically, it's a program that gives money to lots of people, but not enough to really solve the problem. So since 2008, I've been saying, focus on the 26% in absolute poverty, and don't give it to the people who are above average income. Finally, the first pillar on that chart I had before is the National Pension Scheme. And this started in 1988. The problem is it's not very well accepted by the Korean population. So in 2012, only 43% of the working age population was making contributions to the NPS. In most OECD countries, you'd have a figure of 80%. And the problem is that self-employed and non-regular workers tend to evade this payment, which in theory is mandatory. And so even in 2030, the government's long-term projection for the pension scheme assumes that only 40%, I think 40% in 2030 will be receiving a public pension. So that means this elderly poverty problem is not going to go away quickly because the national pension scheme becoming more broad. The other thing is the pension replacement rate. It is 50% of your earnings, but the pension benefit is being cut down to 40% because people don't want to pay higher contributions. And to go back to the long-term projection, the government projects that in 2030, the average contribution period would be only 20 years. So if you contribute 20 years, your replacement rate is 20%. So if you only get 20%, that means you're in absolute poverty. And so the pension system is not going to be the solution, at least for the next 20 or 30 years to the problem. On top of it all, the pension system is not sustainable. At the current replacement rate and contribution rate, we expect it to go into deficit in 2044, or the government expects this. And this big fund, which will be 50% of GDP by 2043, will be exhausted by 2060. And I think that adds to the lack of confidence in the system. When people see this, they say, do I want to get involved in something that might disappear in the future? So the key is, the first step is you have to raise contribution rates. Korea has had it at 9% for some time. We'd have to raise it to 14.1% to avoid a deficit through 2083. But when they try to pass this in the National Assembly, it gets rejected. Let me just summarize. The immediate priority is to make the basic old age pension targeted on low income. And secondly, to make the basic livelihood program more open to older people who aren't eligible. We have to make the NPS more effective by increasing coverage, by forcing people to participate. It is mandatory. And by trying to lengthen their contribution period. And we would prefer to keep the replacement rate at 50%, which is close to the OECD average is 54%. And we need to raise the contribution rate although the current government says they're not going to do that, at least before they leave office in 2017. The second pillar, which I won't go into now, is the company pension system. That was started in 2005. That covers people with more than 1 year of tenure at a company, so basically regular workers. And as a share of the employees, only 25% are covered, only 12% of working age. So again, it's a good system, but it covers only a small segment of the population. And let me just finish with one of the key things in Korea. If you have children in school, you know Koreans, the hagwon issue. And in Korea, there was a survey 2 years ago, and they asked women, how many children would you like to have? And the average was 2.7. And of course, the birth rate is about 1.3. And then the next question was, why don't you have 2.7? And the leading reason was education costs. And that is basically hagwon and the high cost for university, which is mainly private and relatively expensive. So this is our PISA study, and it shows how many 15-year-olds, so this would be third year of middle school, junior high school. And so in Korea, 65% of 15-year-olds have hagwon classes in mathematics. And Japan would be number 2 in that category. And this is very intense. When I visit my friends in Korea, even at midnight on Saturday, their kids are still at hagwon, trying to go to Yonsei or Seoldehak. And it puts a lot of pressure on kids. I don't know if it's the best system for youth. It also leads to inequality because if you take the low income category, below 1 million in income per month, only about 50% of the youth go to hagwon. If you go to the high income category of over 7 million, it's more like 85% go to hagwon. And then there's a big category of distinction between good hagwon and bad hagwon. And so this perpetuates inequality as well. And so we need to really change the education system so the hagwon are not a criteria for going to Seoul National University, the Sky Universities in essence. The government's making good steps by trying to put hagwon in schools. So basically the teachers stay after school and do a hagwon there that's free. Or they put all the key questions on the university admission exam on the public broadcasting system. So you can answer those questions and you might see what will be on the exam. So they're trying to do steps to change reliance on hagwon. But the key thing would be to change the university admission system. Hagwon are geared to helping you answer a multiple choice exam. If you take the admission officer system, which is now the school record system, then you look at the overall performance, what they do in school, if they do other activities, and then you would take the emphasis off hagwon and trying to get better scores. So that, to me, in the long run, this is the key to social mobility in Korea. So let me stop here, and I guess Isabel will comment now. Thank you.
Discuss now, go forward.
Good afternoon. Thank you very much to KEI for inviting me to be a discussant for this fascinating presentation. And Randall, thank you very much. You've covered so much ground. I don't quite know where to start. Fortunately, we at the IMF don't know much about structural aspects. So I would say, though, by way of preface, we feel you've really hit the nail on the head in terms of identifying what are the key challenges that the Korean economy has to grapple with at this point, and we essentially agree with the overall diagnostic without any afterthoughts. So anything I say that is a tiny bit different is really a matter of nuance and perhaps also reflecting the more macroeconomic perspective that the IMF takes. Let me just say I had the benefit of doing a staff visit, IMF staff visit to Korea just at the end of June, which allowed us to recalibrate a little bit our assessment of the near-term outlook. And on this, I would say I very much agree with what Randall said earlier. We feel the economy is hitting a bit of a soft patch. And this is very much visible in the sort of confidence numbers, the consumer confidence, business confidence, producer production indices. And this seems to reflect a combination of three factors. One is what is happening to the global economy, as Randall mentioned. Two is the very tragedy, which has had a much more protracted impact than people expected. But three, and we weren't quite aware of that until we got to Seoul and started looking at numbers and talking to people. Three, there's a perception, including in some of the government circles, that public policy has played a role, particularly fiscal policy, which ended up being actually towards the end of last year. That now sees in the numbers. Now, what does that mean in terms of growth rate? We have revised our growth forecast for this year to 3.6%. We'll have to see how things move from here on, because since I came back from Seoul, there's been a new Deputy Prime Minister and Finance Minister installed, who's made a lot of very pro-growth statements and policy announcements, and so depending on how much of that gets implemented quickly and how much he succeeds in shaking off the mood of poor confidence, that could still have an impact. But it's not, it's not clear really how quickly the mood can change, in particular because he ruled out the possibility of a supplementary budget, which we ourselves would have thought may not be a bad idea, particularly considering that there's persistent revenue shortfalls. And in Korea, the fiscal framework is such that when you have revenue shortfalls, you have to cut spending by a matching amount. You can't just borrow more to make up the difference, as is the case in many countries. And so, because of these revenue shortfalls, there is the spectrum of additional spending cuts between now and the end of the year, which obviously would not help growth. So there may be scope to use other sort of para-budget funds, public enterprises and things to make up the difference. But that was already the strategy last year, and that didn't work, and spending ended up being cut even more than the revenue shortfall. So we have a bit of a worry that it could happen this year again. Then there's monetary policy, and is there scope there? There's a lot of talk recently that the Bank of Korea, after having made hawkish statements for the first couple of weeks after the new governor was appointed, is now heading towards a rate cut. Is that a good idea? Well, I mean, on the one hand, inflation is very subdued, price pressures are very subdued, inflation is still around 1.7%. Against a target band of 2.5 to 3.5%, so it's been well below for some time. Partly this reflects administrative prices, so that's not a real measure of demand pressures, but and food prices, which have also been low, and commodity prices, which have been low. So all of that shouldn't have really any impact on the stance of monetary policy. But it also reflects that there's still some output gap, which we expect to persist well into next year now. And it reflects that the exchange rate has been very strong so far this year. And given how open an economy Korea is, that has clearly played a moderating influence on prices. So to cut a long story short, cutting interest rates, well, why not? Our preference, frankly, would be to use fiscal policy, but given the political context, that's not likely to happen this year. So certainly, if there's no sign that confidence is picking up, it probably wouldn't do any harm to do that, to cut interest rates or to loosen monetary policy. The third point I would stress, and this is something Randall hasn't talked about very much, although it's more present in the report, is the current account. Korea ended 2013 with a record high current account surplus of over 6% of GDP. And this shows no signs of moderating so far this year. Partly this is good and it reflects very healthy exports despite the higher exchange rate. But partly this is not so good because it reflects lower imports, very sluggish imports. And this goes back to the story of fairly sluggish domestic demand, companies not investing as much as they might, and households holding off on consumption. So that's the less positive part on the outlook. Now, having said that, when one asks, well, what are the big risks? What are in the near-term outlook that Korea faces? And an obvious one is the prospect of monetary policy normalization in the U.S. And possibly other advanced economies. And here, our sense is Korea is really well positioned to weather any change in market mood. In fact, that already became clear last year when there was the so-called taper tantrum after the first reference by the chairman of the Federal Reserve to the imminent tapering of U.S. quantitative easing. There was quite a lot of turmoil in global financial markets. A number of emerging markets got shaken off quite a bit, but not Korea. Korea behaved more as a safe haven, receiving more capital inflows when people pulled out of India, Indonesia, and Brazil, and Turkey, etc. So we expect that most likely the same would happen again, and the reason is that Korea's fundamentals, macroeconomic fundamentals, as Randall mentioned, are very strong. The public debt is very low, international reserves are high, there's no current account deficit, there's a sound banking sector. So in times of trouble, this is a good place to park money if you're a global investor. And secondly, of course, the U.S. monetary policy normalization, if the Fed is sensible, which of course it is, will be driven by improved performance and improved prospects for the U.S. economy. And the U.S. is one of the biggest trade partners for Korea, one of its main exports destinations, and that of course will also help the Korean economy, even if interest rates are tighter. So, on the face of it, there's a lot of good things to say about Korea's economy right now. But then and that really struck me when I was there again at the end of June, people are very unhappy. I mean, there's one thing is the sort of horrendous suicide rates statistics that Randall showed, but on the ground, and I don't read Korean, but I read the English press in Korea, and the mood is just very angry. People feel that the government is not doing enough, that the economy is not doing well enough. And this is a bit strange because, if Korea grows 3.6% this year, it's quite a bit faster than in the last few years. And it's in line with what we think is the sort of steady state growth potential, not just we. I mean, I think you and KDI and others. And so when we hear the new deputy prime minister come in and say growth is too low, it's a scandal, things are not well, we're sort of thinking, well, hold on, are you thinking Korea should grow at 6% or something? And so that's a bit of a worry in some of what he's been saying. But I think more importantly, the reason why there's so much dissatisfaction is that this growth that has been taking place has not been well shared. And you talked about that, Randall, but one of the statistics that I find most striking is when you look at the distribution of national income between wages and corporate profits. In, I think, all OECD countries, there's been a tendency for these to diverge and for corporates to grab a larger share of national income over the last decade or so. But in Korea, it's been really extreme. If you see, most OECD countries, the chart went like this, and Korea, it went like this. So households have been getting really squeezed. Household disposable income has been growing far less quickly than GDP for quite some time now. And that has led, among other problems, to a buildup of debt. which is now there's a bit of a vicious circle. Households have been getting into more and more debt to try and preserve what consumption they could, despite tepid income growth, and now this sort of debt overhang is constraining their ability to consume, etc. So this is a delicate problem to deal with in the near term. And then there are obviously the in our mind the biggest long-term problem, medium-term problem is aging, and what this alone is going to do to potential growth. You mentioned in your OECD survey the KDI estimate that potential growth would fall to 2.5% of GDP. We did some calculation. We land around the same place, and this primarily driven by the decline in the labor force. So it's really imperative to do more to boost this labor force, and as you mentioned, two things here: women and the youth who are much less active in the labor market than in other countries. The other advantage, of course, of getting more women and more youth in the labor force is that it would boost household incomes. It's sort of a complete platitude, but if you have two people working in the household, it's better than one in terms of, again, servicing the debt and consuming, and so that would help the economy generally. Let me maybe mention a few points to nuance what you were saying. One is on SMEs. I mean, we had identified the sort of problem with SME financing, with the government all over it, and not doing it in a way that bolsters efficiency. And you've done some much more granular analysis, which I found fascinating. One thing, though, that we were told when we were in Korea in June, we started looking into it, is this in the SME sector, there's really small and medium-sized enterprises in the traditional sense, and this, we've been assured, have the same level of productivity as in the rest of the OECD. And then there's thousands of micro-enterprises or self-employed people, or barely enterprises at all, really. And this is where there is essentially zero productivity growth, over-indebtedness. And the reason why this is such a large part of the economy is the lack of social safety net, particularly for people after a certain age, after the sort of mandatory legal retirement age, who don't have pension income, who usually don't have much by way of personal savings. As you saw, the basic pension rate is not enough to keep one out of poverty, and so they open a chicken house or things like that. So it's not a productive economy, and so certainly that's so. Just that to nuance the diagnostic here, but also to show that it's the problem of productivity in the SME sector and the problem of the social safety net have to be addressed together. Because if you all of a sudden start curtailing all the government support to these SMEs that are kept on life support and are just not productive, but you don't provide a social safety net for all the people who depend on it, then you have a major social problem, an even bigger social problem. Related to that, you talked about the sort of not explosion, but very rapid growth in social spending that would be driven by the current legal framework, and therefore your hesitation to push for higher social spending. I think from the IMF perspective, we do encourage higher social spending now. The issue, perhaps, at least in the number crunching that we've done, is that the bulk of this increase in social spending would be driven by the basic pension. But this is absurd. This is because the national pension system has such limited coverage that you end up with almost the entire population covered by the basic old age scheme. it would seem much more sensible to move a higher share of the population towards a contribution-based system with a mix of the national pension system and corporate plans, and that way relieving the burden on the budget to pay people pension. I mean, no country in the world pays the bulk of the population's pensions out of the budget. So that's one aspect, and that's obviously related to moving more workers into the regulated workers. And maybe the last point I would say is the role of fiscal policy. So as I said, we think there's a need for a higher social safety net now to help households to boost household disposable income, to reduce the uncertainty in the economy. And to a large extent, this is also what the president has been saying, and to address inequality and all that. The question is, how is that going to be paid for? Now, until the recent change of government, there was a very strong commitment to not increasing the debt, not borrowing more, as well as a very strong commitment to not raise taxes. And so that really poses a conundrum if you make pledges to increase social spending and then have no way of financing them. And the way this was sort of rationalized to us in the field was to say, well, that's why the Ministry of Finance keeps making over-optimistic revenue forecasts, because that's the way of squaring the circle, except it doesn't work, really. So we would emphasize more the ability of the Korean tax system to collect a lot more taxes than it currently does. The system is just absolutely full of leaks. Mostly in the form of tax exemptions, which are all incentives for one purpose or another, which have piled up over the years. And it's both on the personal income tax, VAT are the biggest culprits, but there's also a lot of waste on the corporate income tax side with R&D incentives that only profit the business that does it. And so a lot of scope to raise taxes. And in our view, also no rush to go back to zero balanced budget deficit, because the public sector is structurally in surplus right now and for the foreseeable future, given the accumulation of savings into the national pension system. And so now, is that what the new DPM has in mind? Not entirely clear. We'll see in the new budget, but certainly we're not worried that if there's a bit more relaxation about fiscal generally, that would be good. And then, okay, maybe just one last point. You hardly talked about the financial sector, other than to say that the banks are not lending to SMEs. And we see the financial sector in Korea as an underused, as an area that could support the economy quite a lot more, but it's right now really tightly regulated. The banks, I mean, it's understandable. The banks played a large part in the Asian crisis. So one can see that the government wants to keep them under very tight control, but right now they're just not allowed to function on a commercial basis. To exaggerate, just barely. They can't make any money, and we were even told by one of the regulators that this is because banks have a social responsibility. Well, that's all nice and well, but that's maybe not a recipe for a fast-growing service sector or economy. So. You know, the good thing is they're very sound now. They have large capital, they have large prudential buffers, and that should remain the case. So when we hear thoughts of tinkering of loosening the loan-to-value ratios and debt-to-income ratios, we tend to cringe a little bit, because that's a quick fix. That's not going to do much good to sustain growth in the long run, and for sure it's going to weaken the banks. But we see a lot of scope to let the financial sector develop its activities to the same degree that you would see in other OECD countries. So I think I'll leave it at that.
Well, thank you, Isabel.
I just say, do you want to make any quick comments on Isabel's comments real quick, and then we'll open up maybe to questions.
All right. No, I agree very much. The new prime minister talked about DTI and LTV as his way of stimulating the economy, and Korea is one country that avoided a house property bubble, and it's partly some policies by Nobu we thought were excessive to keep demand down, but we think the ratios were very good in preventing this kind of risk. So if that's the stimulus policy, we would have our concerns as well. And on social spending, I agree very much that in the short run, basic old age pension, the national livelihood protection needs to be expanded, and then in the longer run, make the NPS the key form of support for elderly. But the government has no sign of moving in that direction. And I also agree part of the SME problem is the supply. If people leave firms at age 53, they've got to do something. And so if we keep them working at 65, even at a lower wage, that would be better than having an endless supply of these low productivity SMEs. Japan has a new system, actually, where people have to retire at 60, and they have the right to come back as a fixed-term, non-regular worker. So basically half the salary, and they can keep working. I'm not sure that's the best way either to make it mandatory, but that type of approach where you can stay past the certain retirement age and not have to set up a small family business. I would prefer this approach of fixed-term workers who are over 60. And on the tax system, we agree very much this old problem of the self-employed not paying taxes, and that makes the personal income tax system very weak and has a very weak role in redistribution. And so we say you have to use the VAT. The VAT raises implications about distribution as well. So the bottom line is we moved to credit cards back in the early 2000s, created a whole new problem of household debt, but it didn't bring enough income into the system. So we need a personal income tax system. In Japan, they're moving towards a ID system to try to bring all the money into the tax base. And that would allow the personal income tax to be much broader and have a more effective role in redistribution. But in the long run, we think that will have to start rising towards European levels. The OECD, the average VAT is 18%. So when Korea is one of the old societies with a social safety net, you will have to think about having a VAT that's twice as high. In Europe, the average is 22%. France, I think, is 21. Some countries go up to 25. So in the long run, we'll have to think about the VAT as being a way to finance elderly society in Korea. I think it's very good. The IMF, we really do try to get out of the financial sphere and let our experts talk about that. And then we focus really hard on some of these other issues. So it's a very good distribution of tasks. When I visit Washington, I always visit the IMF to see what they're thinking.
All right, well, we'll open up to the floor if there's any questions. Yeah, right here in the front. All right, if you could just wait for the mic and then identify yourself.
Okay.
Thanks.
A couple of points, if I may. More on the micro side than the macro side, I guess. You mentioned the creative economy. In the report, you mentioned getting a level playing field between manufacturing and services. One of the striking points about Korean manufacturing is that Korean manufacturers are subsidized for both electricity use and railway use. So the Korean Railway is one of the few railways in the world that loses money on freight. Any other railway in the world can make money on freight, but the Korean Railway doesn't. Korea is one of the only countries in the world where households cross-subsidize industry for electricity. Of course, this gets also to Isabel's point about income distribution. Why that? Well, we can talk about why it happens, but it's another point where if you want a level playing field, one thing you could do is stop subsidizing manufacturing by those important kinds of infrastructure activities. Second point, if I may, I always get nervous when the OECD calls for less regulation, because it seems to me there's good regulation and there's bad regulation, and maybe the labor market or the financial markets may be in some ways overregulated, but I don't think anybody thinks ferry operators are overregulated. So it seems to me that just calling for deregulation is maybe a little bit too broad brush. The final point I might make, just a friendly amendment. Both of you have talked about the high suicide rate, and your bar graph was very striking with the elderly suicide rate. One thing that neither of you mentioned, Korea has one of the world's highest suicide rates overall But if you divide it by gender, it's really striking that it's the female suicide rate that is just about the highest in the world. Males are somewhat higher, but not so high. I don't know if it's elderly women, what it is, but if you wanted to address that problem, it seems to me that's one thing to look at, the very high suicide rate among Korean females. Thank you.
Yeah, gentleman right here.
Hi, David Livingston from the Carnegie Endowment. I was just wondering if you could address a little bit. I saw some color in here in the summary of chapter findings, but the emission trading system. Just to provide a little bit of context, I know last year there had been some reports that had analyzed the actual structure of the system and suggested that prices would be the highest in the world, could likely exceed $90 per ton of CO2 equivalent. And then I saw, just following Australia's abandoning of their plans for an emission trading system, the new Prime Minister and Finance Minister came out and said, we recognize there are significant flaws with the system. We need to revise what part this might play in our green growth strategy. And I'd just be interested in your perspective.
I'm sure you saw business is calling for them to, at a minimum, postpone it, if not scrap the whole thing.
Right, yeah.
Do you want to go ahead?
Sure. On deregulation, I agree. We don't really use the term deregulation. We say regulatory reform because we want to get the idea we want to improve regulation by getting rid of the unnecessary ones and making them more efficient. And so if I said deregulation, I misspoke because our official lingo is regulatory reform. And we agree very much. I think the Seoul as a whole brings a whole perspective that in Korea there are certain regulations that weren't enforced, and maybe it's worth to pay the price of slower growth to enforce some regulations on safety. As I understood the tragedy that overloading the boat contributed to it, the freight. And so that leads to lower prices for the passengers and everything, which is they enjoy, but there's a high cost. So I think regulatory reform in some cases would mean better or stricter regulation to avoid such tragedies. So I agree very much. On the playing field, the electricity sector is a mess because basically farmers get almost free electricity, and we would argue that in overall the electricity charges are below cost. So in a sense, Korea is a very energy-intensive economy because electricity is provided at below cost, especially for manufacturing and farmers. So we think everyone should pay full cost for electricity, and if you want to have green growth, you should even make it more expensive because green growth is the priority, or was the priority in Korea. And the suicide rates, I've heard that, but I have never looked at it, but that'd be an interesting topic. And your question on electricity leads into green growth. We did 2 chapters in the past on green growth under Lee Myung-bak, and then the new president came in and that term disappeared altogether. It reminded me of the old Soviet Union when you had somebody in a picture and there's one guy next to the leader, and then when he disappears, like green growth was taken out of every document and just disappeared from sight. And we were very enthusiastic because we thought Korea, with its technology and had a chance to be a real front runner. In fact, we used to call Lee Myung-bak the godfather of green growth because he was so enthusiastic about green growth. So we think electricity pricing is one aspect that needs to be improved. On the ETS, to be honest, I'm just hoping that it goes through. I mean, we haven't looked as much at the details how it goes through, but in every country, it's extremely difficult to get an ETS system in place. In Tokyo, for example, there's a voluntary ETS for Tokyo itself, and that has reduced emissions in Tokyo by 20%. But trying to make that a nationwide system has been extremely difficult in Japan, and Australia, as you mentioned, abandoned theirs. So I think the key thing is put the system in place and then adjust over time. And for us, we want to move away from the grandfathering, which is typical of new systems where everyone gets to have permits for what they used to do, and go towards auctioning. So I would put the system in place, see what the price is, and then move from 3% auctioned, 6%, and try to rapidly increase the share of auction permits so that we don't penalize the newcomers who are trying to break into business.
Just real quick off your comment on sort of green growth being downgraded. Do either of you see basically because of the short-term presidency and the sort of shifting of priorities, difficulties in implementing long-term needed reforms because administrations change and policy preferences change, and so therefore, aspects of the creative economy agenda that may be important for Korea's long-term growth or green growth tend to get downgraded and then not fully implemented later on, or perhaps pushed to the wayside.
Yeah. Well, I think it shows the importance of getting a good framework in place and then not trying to fine-tune it too much, or like an LTV or DTI. We don't like fine-tuning of those things. They're for prudential reasons, and when the market goes down, you shouldn't raise the ratios to try to boost demand. So in green growth, we need to put a good ETS in place and then leave it there, and over the next 50 years, see Korea become a front runner in green growth with low emissions. So we think we need to really well-designed policy and then let it develop and not try to change it with each political change in the country.
Yes, the gentleman in the back there.
Hi, my name is Daniel Daniel Moon from the State Department. Thank you, everybody, for giving this talk. It's been a very informative talk. My question is directed at a specific topic that both of you touched upon, which is the national pension scheme. I know, Dr. Jones, that you said that in response to the exponentially growing deficit in the pension scheme, raising the contribution rate might be a possible solution to this. You mentioned that relegating the funding sources to corporate plans might be a possible remedy. But couldn't one make the argument that such suggestions are simply short-term remedies, a delay, if you will, to the inevitable aging population, and as a subsequent result, the inevitable deficit? And a corollary question to that is, shouldn't the ROK government looking into a fundamental flaw in the pension system, where they should be looking into retaining the workforce, retaining the aging population as a component of the workforce?
Yeah, in most countries you have three options. You raise the pension eligibility age, lower the benefit, or raise contributions. And in most countries you say raise retirement age. I think Iceland is 69 years, and some Scandinavian countries are going higher. Korea, the problem is with people getting pushed out at 57 or earlier. If you raise the age, you increase the gap before they have nothing to do except the small SMEs. And so if we could change the employment system and have people work to 65 or even 67, then we raise the retirement age, the pension eligibility age, to 67 or higher. So I think if we could change the labor market system, that would be the best approach, is having people work longer. I know in many countries there's this fallacy that if you have more older people working, there's fewer jobs for younger people. And in France, where I live, young people do stage after stage, and they go to the UK or the US because old people have jobs and the young people can't get them. But we have studies showing that countries with high employment for elderly also have high employment for young people. There's not a fixed number of jobs. So once we can change the wage system and get people staying in companies to 60, 65, 70, then we can raise the pension eligibility age, and that will be the biggest benefit for making the system sustainable. But we can't propose that now because the labor market is still not appropriate in our view.
You've both touched on labor market issues in Korea, and it seems like a lot of the challenges Korea face, the demographics obviously play an issue, but are tied into the labor market. Either, the issue of people being worked out or pushed out of companies early and not having gainful employment, the dual labor system. I was at a private event a couple weeks ago to where they were talking about how a lot of Korea's historic growth has been on over contributions on the labor side as opposed to the capital side. Mm-hmm. So you have this largely, or to an extent, over labor driven economic growth. Mm-hmm. You've seen hours go down as people become wealthier. Mm-hmm. Population is going to go down. We did a paper, or Elizabeth Stevens did a paper for us a couple of years ago, essentially, that points out that immigration won't resolve the issue. Mm-hmm. You're not going to be able to take and change the birth rate enough to fix the problem, in time. She even did a supplemental thing for us later on, showing that even unification and bringing in the North Korean population doesn't solve the problems. So, it seems like a lot of these challenges, ultimately they come back to challenges within the labor market itself. How important in the grand scheme of things for Korea going forward is really sort of labor market reform?
I would say it's critical. I mean, you're absolutely right. The only way to square the circle is to raise the productivity of labor, which is very low, as Rendell's chart illustrated. And I mean, there's a number of reasons for that, but certainly one is this dual labor market with more than half the population which doesn't get any training, which doesn't get any sort of on-the-job, whether on-the-job or out-of-job, but don't invest in human capital, don't build human capital. The difficulty is, how do you do that? And you've written very boldly in your survey, and I think we did too, that the way to do it is to narrow the gap, is to reduce the social protection and wages of the protected workers and improve it for the others. But in reality, there's no way this is going to happen. No way. And so you have these tripartite discussions between the labor unions and the government and the employers' unions, federation. But the people in the it's a standard problem. It's just bigger in Korea and in Japan, that you have non-represented, non-regular workers. Nobody's taking care of their interest. And the government could, in theory, use the legislative way to impose some changes, but right now they're not willing to do that. So it's a difficult one.
And a lot of it's not even legislative, because if you look at the law itself, it doesn't look that bad on paper. I mean, you give 3 months' notice if you want to fire someone, and so it's kind of average for OECD. But in practice, it's burdensome for countries, the uncertainty, what it will cost, so they avoid hiring regular workers to avoid that cost and uncertainty. And it's really a classic insider-outsider problem. The unions represent the insiders, or the regular workers, and nobody represents, as Isabel said, the outsiders. And so that's the government's role, but it hasn't been gone very far so far. In Japan, they're trying to make a third category. They're called flexible, almost full-time workers, regular workers. So they can get the almost the wage, but not the employment protection. And so you kind of try to combine the two aspects and make a third. But we, as economists, think the first best solution is a unified labor market, not making 3 segments to your labor market. So I'm not sure that's the second best solution or not.
I don't know, could you change the protection and everything if it was like a long-term phase out? So in other words, it didn't necessarily maybe impact people who've been in the system a long time, but people just starting knew that they would be in a more flexible system kind of.
Yeah. You could say those who are hired now do not get the same employment. I think it goes to the innovation. Both countries, if you have a lifetime job basically at a company, do you want to go start work at a new startup that might fail in a few years, knowing you have this security? So I think it really slows the shift of resources to the innovative sector. Until we address that, it all goes back to labor market again.
All right, well, I'd like to thank you both. This has been a very interesting discussion. I mean, we've touched on a lot of different issues, from either the financial sector, service sector, MSME problems, labor markets, and other things. And I think there's a lot more we could talk about. As you noted, we just have barely touched on the trade side of things. So if you please join me in thanking Isabel and Randall for a very interesting discussion. Thank you. Thank you.